The first rally after a hard, powerful drop is not the one. Do you understand? Like if you drop like this, boom, this rally, if you believe that, you just have no clue of how markets work in the psychology behind. That's a dead cat bounce, right? Right? Am I right? You guys know that, right? The dead cat bounce, the cat's dead. I'm sorry. I'm a cat lover. I have a cat. She's right here, right? That cat is dead. Just because the body bounces off the ground does not mean that the body is alive. It's freaking dead, right? So here's the boom, cat's dead. The carcass bounces, but the cat's not alive. And here's the secondary drop. Okay, very simple, right? Everything about NVIDIA is a moneymaker today. The gap up, moneymaker. The bounce up, freaking bounce up, topping tail bar. Are you kidding me? Wait a minute. Bounce. Check this out. Drop. What do I tell you to do? What do I tell you to do with every move? How do you divide it up? There's 3 lines. Do you know the 3 lines? The first line is to split it in half, right? What's the other 2 lines? 1/3 and 2/3. So 33%, right? 50% and 66%, right? So we drop hard, the cat's dead. The bounce is gonna be in this range. But if it's hard enough, trust me, 7 to 8 times out of 10, it won't get past the 3rd. Boom! You understand? If it's not that powerful, maybe it'll get up to the 50%. But most of the time, you're going to fail around that bottom 3%. So check this out. We get the bottom 3rd, which also is the 20-period moving average, which also gives us the signal of a topping tail bar torpedo. You guys, do you understand what a topping tail bar torpedo is? Let me show you what a topping tail bar torpedo is. Let's go over what a torpedo is. All right. This is a tail bar, a topping tail bar. All right. The topping tail bar is almost all tail. The pure tail bar is a little body, and most of the range of the bar is tail. You know, so by default, the body is little. Now, you can have the body little green, right, as well. Or you can have the body red. Both are bearish in the right position. Okay, so one's red, one's green, but the red one is slightly more bearish, right? Because it's gone deeper than the open. The green one, the open is still the low, and you still haven't broken the opening price. The red, you've broken the open price. Now, what makes a torpedo is that the red keeps going. It keeps dropping. So you can have a topping tail bar turns into a topping tail bar torpedo, which means you dive into the torpedo. There's no waiting. You don't have to wait. You dive into the torpedo. All right. You wait for a topping tail bar, but you dive into the torpedo, right? So we dive into this bar. Why? to the 20-period moving average. That's also the dead cat bounce. That's also the dead cat bounce to the 33%. That's also not just a topping tail bar. It's a topping tail bar plus a torpedo. Now, translate that. Sometimes I feel sorry for the translators. They got to translate that, what I just said, in Spanish and in Portuguese. The concept I want to come alive here is when a big bar of one color, of a solid color, a big solid color bar, in this case it's red, is late in your cycle. Understand what a cycle is. It's this. So it's on this side of the cycle, 1 and 2, interrupted by a pause, right? Of any sort. So the pause could be this, like the whales. This is a pause, this is a pause, and this is a pause, something brief, right? But if it's late in the cycle, if it's late in the cycle, if it's late in the cycle, if you get a solid bar late in the cycle, and that bar has little to no follow through, it's criteria 2. Solid bar, late in the cycle, little to no follow through. Look at the follow through. Nothing. And the color of that bar gets taken out. Not only are you going to go in the opposite direction, but it's going to statistically be big. Because this is the ultimate squeeze. Think of this bar, right, as a fish tank, but a vertical one. So think of this as a fish tank, right? Right? Now, jam, yeah, it is, Vincent, that's true. But jam 1,000 human beings in here. You'll see their faces squished up against the glass. They're all in this fish tank, betting on the downside. Everybody's in this bar. Do you understand? They're jammed in this fish tank. They can't even move. There's no space for them to move. You see their faces. You're on the outside. You're looking at this fish tank. You see their faces squished up against the glass, waiting for more downside. But the moment that this happens, they're all running or scrambling to break loose, to get out of the fish tank. And that's what causes this. You understand? They're trapped. Fat bars late in the cycle that have little to no follow through can be huge, huge opportunities. Now, I know I told you that this is a market where you don't trust green. But in this scenario, I'm more talking at the open. But in this scenario, it's not the case. All right, cool. All right, guys. So all I wanted to do and share with you today is this no follow through concept, right? Yes, we'll meet in October, Kyle. Awesome. Nice, Thiago. This no follow through concept, right? That's late in the cycle, which means that it's not in the first leg, guys. This doesn't work in the first leg as well. So what do I mean by the first leg? The first drop, if you get this event in the first drop, it doesn't work as well because that's the dead cat bounce part of it, right? There is some validity to it, but it's not the same. It works better here. Tell me you understand this. The no follow through concept, that fat bar, no follow through. Late in the cycle, it has higher odds, greater power, because that's I didn't want to short it at 69, but I want to short it at 18,000. Like, really? Are you dumb? What do you know basic math? I didn't want to short it at the top. I want to short it after it's dropped 75%. Here, the money is right. Here, the money is wrong. You have to understand the difference between igniting money and ending money. This money ends the game, and this money starts the game. It ignites the game. This money is changing something. This money is late to the party. You understand, guys? One's early to the party and one's late to the party. It's both money. It's both big money. You can't have a big bar unless there's big money, right? Do you follow what I'm saying? But there's early money, or there's smart money and dumb money. Let's put it that way. All right? Smart money is early. It's changing something. That first red bar is changing. Guess what it's changing? Well, what are you supposed to do with a gap? What do I always tell you to do with a gap? What do I tell you to do? Someone type it in. What do I tell you to do with a gap? To fill it in. So let's fill it in. Let's fill in the gap. So do you see now that this is changing something? The changing color is the smart money. That's the early money. This is not changing anything. It's just saying, oh, now I realize what you were talking about. Late. Duh.